Okay, good afternoon, everyone. We're going to go ahead and get started now. My name is Lance Beck. I'm President and CEO of the Greater Spokane Valley Chamber of Commerce. Thank you for joining us today for this week's Joint Chamber Resource Call. We are pleased to bring an update on PPP loan forgiveness, and we have quite the team lined up for you here today to walk you through the latest on this aspect. And so as we get started, I want to run a quick introduction through, we've got Nania, the manager of Spokane's SBA branch, Mark Costello, Deputy District Director with SBA out of Seattle, Janie Sacco, Marketing and Outreach Specialist for SBA out of the Seattle district there, and then again, Stephen Burke with Western Washington's Regional Manager for Small Business Development Center. All on the call. We have a full presentation. Again, the call is a little bit extended today, so we will go until 4:30. We'll have time for Q&A at the end. We did have quite a few questions submitted early, so as we go through the meeting, please hold questions until the end of the meeting here. To ask a question, please use the chat function. We are going to try and keep all mics muted today, and so you can use your chat box throughout the call. And you can do so by putting your first name, last name. Your organization does help us track down in case we aren't able to answer your question directly on the call today. We can do follow-up. We will provide direct follow-up to all questions that are asked. You can also submit questions via email to info@SpokaneValleyChamber.org. I'll have Colin put that in the chat box there for you throughout the meeting today. So again, info@SpokaneValleyChamber.org. I want to acknowledge our partners at Greater Spokane Incorporated and the West Plains Chamber for helping us pull these calls together on the weekly basis here. We're going to continue to do this for the foreseeable future with subject matter that's relevant each week. And so with that, and with the short time frame that we have today, I want to turn it over to Joel and have him take it away from here so we can make sure we get through the full presentation.
Hey, Lance.
Yep.
Hey, this is Mark Costello. It looked like Joel was, for whatever reason, having some difficulty logging on. So why don't I go ahead and just make a couple of introductory comments, if that's okay?
Perfect. Yeah, that'd be great.
Okay, super. Well, thank you, Lance, and we certainly appreciate the opportunity to visit with your membership and the members of the other chambers as well. We're getting some exposure that is unlike any that we have before, and this is just really a terrific opportunity. We've been on previously to talk about the Paycheck Protection Program, more from the perspective of the loan program itself, and how to get a PPP loan and who's offering these loans and things of that nature, what the status of the program is, and so on. We're now many weeks into the process, and here about 2 weeks ago, the actual forgiveness application was published. And this is obviously really important because this idea of loan forgiveness is a key element of the PPP. SBA and Treasury put this program together, and really it was a partnership with not only the lenders that are making these loans, but with the small businesses too. In that the idea was that we're asking the business owners to keep their workforce together and use these loan proceeds to be able to continue to compensate their employees, and hopefully be in a position to sort of re-engage when the economy stabilized. That's still the case, and now we're kind of entering into the next phase here, where a lot of the businesses who were initial recipients of PPP funding are coming up on the end of the what we would call the covered period, the 8-week time frame during which they were requested to use the program. And we're happy to know or to note that this thing is starting to take shape in terms of, number one, we have this forgiveness application available for the small businesses to complete and submit to their lenders. And we also have received some additional sort of policy regulatory guidance that I think clarifies some of the ambiguity that goes along with trying to understand that application. We're not trying to suggest that this isn't a fairly complicated program and process. Unfortunately, it is, but I think you'll find that there's some logic to it. And so what we're going to go through today is really intended to kind of build a foundation for folks so that they're going to be able to go out once they complete the 8 weeks of funds utilization, and they're going to be able to fairly confidently complete this application and submit it to their lenders and feel pretty good about the prospects of being able to get the loan forgiveness. Couple of things just about the kind of the program where it is right now. This is the folks on the line here today that have the PPP loan already are among over 90,000 different business owners in the state of Washington who have received PPP loans for over $12 billion. So this has been a fairly monumental I think effort overall, and the the expectation is that a lot of people are going to be going through this process. So you guys are not alone, and we want to try to create maybe a level of understanding so that you're going to feel pretty confident about being able to really capitalize on that forgiveness piece. I wanted to also say, Lance, that the program itself actually continues to be available. And what I mean by that is we had the first round of funding that was burned through fairly quickly. About $350 billion was utilized. Then there was additional legislation to provide an additional $310 billion to support the next round of the PPP. And interestingly, there's still probably $130 billion of that 310 available. So there's still money out there. We still have the same network of lenders, both local and national, credit unions and commercial banks as well, that are all actively engaged in serving their small business customers and still available or still standing at the ready to offer the Paycheck Protection Program. So I just wanted folks to know that option and opportunity continues to exist out there. And I think the really good news is that the backlogs that were sort of plaguing the initial phase of the program are no longer out there. And so we've certainly heard anecdotally anywhere where some lenders are going to be able to turn these applications around in a day. So I think that's really interesting information, again, for folks that perhaps didn't think that they qualified for the program, or just were a little bit turned off by some of the news coverage or the idea of the long loan application queues. The environment is considerably different now. The other thing I wanted to say is that, and I think Steve is going to amplify on this, is that there are currently in Congress, there are changes, structural changes being contemplated in the program, whereby the 8-week covered period looks like it's going to be extended, and perhaps the 75% payroll cost requirement is going to be reduced. So that's something that folks that are currently maybe in the midst of getting a PPP loan, or maybe haven't yet approached the end of their 8-week period, should kind of be listening for, because that could change some of the things that we're talking about today, although not substantially. I think the fundamentals of what we're going to be going over are going to remain the same. So the way we have this thing lined out, Lance, is we're going to have Steve Burke from our Small Business Development Center kind of dig into the application for forgiveness document itself, kind of break down some of the different data items that are requested there, kind of, and really maybe point out some of the key aspects of that document, and some of the logic and methodology around what they're looking for there. And Steve has spent a considerable amount of time kind of trying to understand this thing, and I think he's done a great job of laying out some really key concepts there that folks are going to do well to keep in mind as they go through this application for forgiveness process. And then we're going to kind of put some a little bit of practical sort of application into this thing. My colleague Janie Sacco is going to present a couple of different scenarios where she's going to actually walk through the application and the different elements of data that would be associated with two different types of businesses that would be hypothetically making application for loan forgiveness. So ultimately, I think this is going to be very useful, again, in terms of just starting to build a little bit more confidence, a little bit more familiarity with this process, whereas it's all been somewhat hypothetical up until now. We now have this application document that I think gives us something we can focus on. So with that, Lance, I'm going to go ahead and ask Steve to go ahead and start to dig into the application document itself. Thanks.
Thanks, Mark, and thanks, Lance. By the way, I noticed that Joel is on. Joel, did you want to say anything first, or shall we just carry on? I think he says carry on. All right. I want to preface a little bit of what Mark said. The material that we're going to cover today is based on the existing situation of an 8-week time period for establishment of the loan forgiveness, use of the PPP funds and loan forgiveness. A few hours ago, the U.S. House voted on a vote of 47-1 to do additional improvements, if you will, to the PPP program. The two that really stand out so far, according to an article in Forbes, is that the 8-week period would extend to 24 weeks, and the threshold for the payroll would change from 75% of the loan funds to 60%. There is additional elements in that legislation, but we don't have it yet. What I do want to say is that the probability of if I were a betting guy, hunch is that that's likely to be passed also by the Senate, potentially signed by the president as early as tomorrow afternoon, which would, as understandably, change some of the things that we're going to discuss today. So keep that in mind as we go through it. I'm hoping that a major portion of the process that we described to you is roughly the same, just some of the additional terms that are changing. Given that, I want to just reiterate that I work with the Washington Small Business Development Centers. I'll have a map for you about that at the end of my portion. We are a group of 31 certified business advisors working out of 25 locations across the state. Our lead office and our primary administration is in Spokane and based Washington State University, of which I'm an employee. With that, I'm going to go ahead and have Lance. Are you going to just advance the slides for us? Yeah, perfect. So today we're going to cover the basic application information, the loan forgiveness, what are the required documents, also the documents that are required to be maintained but are not required to be submitted, the payroll use, costs, and forgiveness calculations. We're going to talk for a minute on the impact of those of you who may have both the EIDL loan and the PPP. And then we're going to talk about the final steps for completing the loan forgiveness application, including what we refer to as the Worksheet A, which is used to complete something called the Schedule A. And we're going to talk about this full-time equivalent calculation, which is a key element of this program. We'll also cover a little bit on self-employed individuals, sole proprietors, but then there's a topic on the representation, certifications, audits, and appeals. Next. All right, the information, I want to really preface this for you. The information provided in this is relevant as of today, may not be so much so tomorrow, but neither myself nor the Washington Small Business Development Centers are the final authority on this material. What you're getting today, as Mark described, is our analysis of the interim final rules, the FAQs, and the loan application information and the backup guidance to give you what we feel is the most accurate. But this information is subject to change at any time. And then a key part of this is that if the legislation passes here in the next few days, it's going to take the U.S. Treasury and the SBA some time to adjust the rules relative to all of this. We probably won't have the answers to all of that within the next week or so. And so it's one of those things we're going to wind up having to be patient on. What are the key requirements of the application? And I should qualify that as not the original application for the PPP, but the loan forgiveness application. Well, it's 11 pages. And when we first received that, as Mark said a couple of weeks ago, we discovered that it was pretty daunting. It does include numerous details and math calculations, which you're going to see when our colleague Janie Sacco covers this topic in some scenarios in a few minutes. But it's important to note that what's required to be submitted to the lender that you receive your PPP loan from is really only 3 of those 11 pages. The first one is the primary application and the loan forgiveness calculations. And the other is a Schedule A that helps support the loan forgiveness calculation form. And then the final thing, the third page that has to be submitted, which is the easiest but probably the most significant, is the actual representations, certifications, and your signature. And that's a series of checkboxes. Next. So here are the documents required to be maintained but are not required to be submitted unless your lender requires that as additional documentation for you, or the SBA requires that, and I'll cover that a little bit more in detail later. So the PPP Schedule A worksheet, which is different from the Schedule A and different from the loan calculation. This is a document that you do need to complete, but you do not need to submit it. You do have to maintain it, however. And this includes salary and wage reductions located on Table 1 and 2. And Janie is going to go through much greater in detail the math related to these. But it also includes documentation on any people that a business owner tried to hire back, a previous employee who then refused to come to work for whatever reason, any actual terminations that you made, resignations, or reductions. So the documentation regarding any of those is another thing that you have to maintain. Plus all records relating to the loan application, the certifications I described, and your compliance with the loan requirements. These documents have to be retained for 6 years after the loan forgiveness or after the loan itself or the remaining portion of the loan is paid in full. Plus, you have to be able to permit inspection of those documents on request by either the lender or the SBA. So want you to be aware of that. It's unlikely to change in the transition into this new legislation. Next. So what's the basic information at the top? You'll see this later on in a graph form, but you're going to be required to provide your employer identification number. That's the actual number identifies your business. the PPP loan number, and a number that identifies the lender. So what they want to know is, who are you? What was the actual loan that was that you were provided with? And who is the actual lender who provided that loan? All key elements. Then in addition, they want the loan amount, the actual disbursement date of the loan, the employees at the time that you originally made the application, because that's a foundation in the FTE requirement, the employees at the request of the time for forgiveness. And then here's a key. The U.S. Treasury has indicated that they intend to start audits and are likely to audit all PPP loans that were in $2 million or more. If you had a loan, and most small businesses probably have a loan for less than $2 million, you want to make sure that you do not check this box. You don't want to tip them off that you're one of those high people that, and might also then disconnect with the rest of the application you fill out. Next. All right, what additional information is required on the loan? Well, you have to describe and select your payroll schedule. That's going to be important, which we'll describe here in a minute as to why. When your payroll costs are actually incurred, which means accrued, or paid, cash. Paid is the day checks or ACH transactions are originated. Incurred is the day that costs are earned or incurred as an expense or cost. And these are relative to the 4 items that are allowed under the PPP. And that includes payroll, rent, utilities, and mortgage interest. The definition of covered period is the 8-week period following funding of the PPP. But there are 2 new elements that came out with the application a couple of weeks ago. The first is that costs that were incurred before the 8 weeks, but paid during the 8 weeks, and costs that were incurred during the 8 weeks, but paid after the 8 weeks, also qualify under the 8-week period for loan forgiveness. And there is a new definition called an alternate payroll covered period, and applies only to payroll, not to the other expenses. But it allows the 8 weeks to start on the first day of the normal pay period following loan disbursement. So if you have a normal pay period, for instance, that starts on May 1st, and you were given the loan, the PPP loan, on April 20th, it would not, your 8-week period could start on May 1st rather than on April 20th. Next. So what about this question of the EIDL loan and the PPP for those of you who received both? Well, I want to point out that the EIDL loan, which is the Economic Injury Disaster Loan, is actually processed not by the lenders, but by the Small Business Administration Office of Disaster Assistance, or the ODA. That group is processing the EIDL in 2 different sections. One is called the EIDL Advance, and then the other is called the EIDL Loan. And it's important that borrowers of the EIDL understand the difference. The EIDL Advance is one that can convert into a grant, but there are some conditions, particularly as it relates to the PPP, that you need to be aware of. The first is, if you receive the EIDL Advance and you receive the PPP, when you go to apply for your PPP loan forgiveness, in this loan forgiveness application that we're talking about, the actual dollar amount of the loan forgiveness is going to be reduced by the amount of the EIDL advance that you received. This is done to prevent essentially double dipping. You can get granted the EIDL advance, or you can get the loan forgiveness in the PPP, but you can't actually take both. As a result, they're going to want your EIDL application number on the PPP application, and they're going to use that to check if you received both. And if they did, and it was used for payroll. Now, there are some early April who received both of those in the early stages of both of these loans. And people who received the EIDL before the PPP should have had it refinanced into the PPP when you receive the PPP offer. But as of today, Over 3 million have received the idle advance, but only something in excess of 500,000 have actually had the idle loan process due to the timing of processing in the SBA's Office of Disaster Assistance. Over 4 million PPP loans have been processed and approved. So there's clearly a timing difference here relative to that. So most people are receiving the PPP before they get their idle loan processed. There are some who've before, but most are receiving it afterwards. What we can tell you, short some of the guidance that we need here, what we can tell you is that you cannot use the idle and the PPP for the same things. So our recommendation is that you keep separate track of these loans, either in a separate bank account or at the very least in your accounting system, so that it's very, very clear when you have to go and produce the records in an audit for each of these loans. Next. So to complete the loan forgiveness application, it requires the borrower to start with something that is required for you to do but not submitted, and that's the completion of the worksheet to Schedule A. Then you complete the Schedule A, then you complete the final loan forgiveness application and calculation form. So there is another form that I mentioned before that has to be submitted, and that's the representations and certifications along with your signature. So the point here is that of these things that I've listed here, the only two that have to be submitted is Schedule A and the completed loan forgiveness application top form, along with the representations and certifications. But the worksheet to Schedule A is not required to be submitted, but you do have to do it and you do have to maintain it. So what does the worksheet to Schedule A do? It computes the eligible compensation for each employee, including calculations for any who had their salaries or chose to have their salaries reduced. It also caps compensation at $100,000 per employee on an annualized basis. Janie is going to cover this in more detail in her scenario examples later. It also is used to determine this critical component called the full-time equivalent, which is payroll hours, a full-time equivalent for the covered payroll period or the alternate covered payroll period that I described earlier. Uses the FTE to determine any reduction in loan forgiveness. That's the purpose of Worksheet A. So the tables that are 1 and 2 in Worksheet A help to determine the salaries and wages paid to each employee by name during the 8-week period as compared to the historic annualized rate. Next. So Worksheet A, included are a definition of payroll costs, which includes salaries, wages, commission, cash tips, vacation pay, hazard pay, and parental, family, medical, or sick leave, and severance pay. So all of those should be documented on your payroll records. And that's how you would support the inclusion of those things in the definition of your payroll costs. Excluded are salaries in excess of $100,000, and that's broken down into further detail later on. Employees outside the United States, or anybody who was covered dollars from the sick or family leave under the Families First Act, which was one of the first acts in the COVID-19 era. Also excluded for this worksheet, this is the Worksheet A, right? That are included in the calculation in the final form, but excluded from Worksheet A are, well, back that up. Independent contractors are not eligible for a PPP. So any of you that tried to include or thought of including people on a 1099 basis, these are independent businesses on their own who are eligible for their own PPP. And as Mark indicated, there's money left in the PPP. And if you know any of those, they should be applying for their own. But otherwise excluded from this worksheet are owner employees on W-2 wages. Typically, if you're have registered as an S Corp, owners can be able to be employees and get W-2 wages, or self-employed, which would be single member LLC only, and sole proprietors, as well as partners, which would mean partners in a corporation, partners in an LLC, partners in a general partnership. These are added up and add their information directly to Schedule A, excluding the independent contractors who are not eligible. Using 75% of the PPP loan amount on qualified payroll and the 8-week period, which could change, establishes that element for full forgiveness, and this is called the safe harbor for payroll. Next. So this FTE, full-time equivalent calculation, what you do is you take the average FTE calculation for the 8-week period and you calculate it through two methods. You add the total employee hours during the 8-week period and divide by 40. Or you calculate every employee who worked 40 hours or more and count that as a 1.0, or everybody who worked less than 40 hours and calculate that as a 0.5. A similar calculation has to be made to determine the historic FTE that the PPP loan was originally based upon. There are 3 possible reference periods that you choose from to establish that historic FTE period. Those are February 15th, 2019 to June 30th, 2019, or January 1, 2020 to February 29th, 2020, or for seasonal employers, May 1st, 2019 to September 15th, 2019. Next. In the event, hopefully for many of those borrowers, if the historic during those one of those choices that you choose of the historic period, the FTE calculation matches the 8-week FTE calculation, then there's no reduction in the forgiveness relative to the FTE. That's called the FTE safe harbor. If there's not a match, then the loan forgiveness is reduced accordingly. Again, the purpose of this FTE was to prevent business owners from taking all of the money in a PPP, applying it to their own income and not hiring back their employees, for which the Paycheck Protection Program was originally designed. To get full loan forgiveness, 75% of the loan amount, and again, it looks like that may change, is used for qualified payroll. 25% is used for the qualified rent, utilities, and mortgage interest. There is some flexibility that's been added in this loan application relative to the FTE number. If you can show written offers to rehire an employee during that 8-week period, but it was rejected, then the reduction in the FTE will not result in a reduction in loan forgiveness. If the same is true if an employee was fired for cause, voluntarily resigned, or wanted a reduction in hours, but you're going to need to have written documentation of any of those items to be able to qualify for a reduction in the FTE under one of those conditions. Next. What about the self-employed individuals, sole proprietors, owners getting W-2 wages, and entity partners? Well, self-employed forgiveness is related to payroll costs, and this is for the 8-week period, which means that it's going to take 8 52 seconds, or 8 weeks out of 52, of line 31 of the individual's 2019 Schedule C. It's true that if you are a general partner, instead of the Schedule C, you would be utilizing the K1, which is what's provided to general partners. So the amounts paid to those self-employed, as well as I mentioned before, owners on W-2 wages, typically under an S-Corp, and general partners, these are all capped at $15,385. That number is 8 50-seconds of $100,000. That's why that number is what it is. Amounts paid to these individuals during the 8-week covered period or alternate covered period are totaled and added to line 9, which means they are not included on Worksheet A. These are all just added together and put on line 9 of Schedule A, which is then fed into the final PPP loan forgiveness application. What I do want to say is that we don't have exact guidance on when you should submit your loan forgiveness application to your lender. Our recommendation, though, is that when you have all of the documentation that you need to back up all the math that goes into this loan application, and you'll see in a minute there's a fair amount of that, when you have all of your payroll records, tax returns, and other documents that have been used to support both the loan and the loan forgiveness, and you have all that together, and you have completed the 11-page loan forgiveness application, say a week, 2 weeks following the end of the 8-week period or whatever new period comes up, then you would want to submit that and get this taken care of. What we do know is that once you submit that, then the lender has 60 days to render a decision on your loan forgiveness. During that time, they may be requesting additional documentation out of the documents that you are being asked to maintain, but didn't have to submit to start with. They have to make their best effort, but they are required to get back to you with a decision on both your loan original eligibility and the loan forgiveness application within 60 days. Next. So this is an important part of this loan forgiveness application. Requires that you provide representations and certifications on a page with a signature. The borrower must certify that you know and understand the rules of the PPP, including the eligibility criteria for you, the use of the proceeds, and the loan forgiveness amounts. And you want to make sure that you have those documents, because the SBA and the lender can ask for a review of that as it deems appropriate and at any time. And lenders themselves are required to confirm the calculations on the loan forgiveness application. If they ask for a review, either the lender or the SBA, the lender is going to be asked the borrower to provide and respond to any questions, and then the SBA is going to consider all the information provided to the borrower in its review. And then in addition, a second stage, if the SBA has established rules and timelines for appeals for any PPP borrower who is finally determined to be either ineligible for the loan and has to return it, or did not obtain the loan forgiveness, they're going to establish that, and you're going to make that appeal and start it with the lender that you that provided the loan to you, and you'll want to ask for the specific steps on how to do that. Next. So here's some things that we don't know yet, and this is just a list to tell you that in the complication of this, there certainly are some things that we want to get a final clarification. Again, what's the actual impact of those of you who got both the EIDL and the PPP, and is there additional guidance on that, and how they're going to verify whether or not you used each of those funds for the appropriate purpose. As you just heard, it looks as though there may be a change in the 8-week time frame, but I wanted to let you know that essentially as of today, it is 8 weeks. We'll see what happens in the next few days. We don't have, as I mentioned before, a final date for the loan forgiveness when you have to have that submitted. That's not clear in the documentation yet, but our recommendation is that if you've used the funds that you've received according to the instructions that we have at the time that you submit that loan forgiveness, that you do it sooner than later. We don't have a clear definition of this thing called any pay period, which is that alternate covered payroll period that allows you to determine what pay period after. Are you on a 2-week basis, twice a month basis, monthly basis, or is there something else? We don't have a final definition on that. We may not, but we do have some guidance here, which you'll see in a minute. And the other thing that we're not clear on is payments to the self-employed owners getting W-2 wages, and any partners are included on that line 9 of Schedule A. But we're not sure if there's going to be any additional questions regarding what qualifying amounts clarification. Let's go to the next page. I noticed that Mark Costello added something to the chat below, and so I'd encourage you to check on that relative to the EIDL and the EIDL grant, or the EIDL advance. As I'd mentioned before, I'm with the Washington Small Business Development Centers. We've got 25 locations, 31 advisors around the state. We're here to help. You can reach out to us. We've got several people, 2 or 3 in the Spokane area. And you can reach us at washington@wsbdc.org, or you can go to our website, wsbdc.org, and contact an advisor.
Hey, Steve, this is Joel Nania here in Spokane. I just wanted to add too, I know we have some North Idaho folks that are on the call. And of course, in Coeur d'Alene, we have the Small Business Development Center that's headed up by Bill Jung and his group. So similar resources over in North Idaho for those 10 counties.
Thanks, Joel. Perfect. I didn't realize we had people from Idaho, and I'm glad that we do. And thanks for making that point. If anybody wants to know how to contact an SBDC unit in pretty much any community or state, all you really need to do is Google SBDC Idaho, and it'll typically take you right to it. Google's been pretty good at collecting that kind of contact information. So I will encourage you to reach out to the SBDC advisor nationwide. And I just heard this from the ASBDC, or America's Association, that for the most part throughout the United States, there's an SBDC advisor within 2 hours of every small business. All right, with that, Lance, go ahead and advance to the next, and then we'll turn it over to Janie Sacco.
Thank you, Lance and Mark and Joel and Steve. So now we're going to go through some of the actual documents that Steve has been referencing and hopefully give you a little bit of guidance on that so that you feel a little bit more comfortable going through the documents. Next slide. Okay, so what we're going to talk about for the remainder of this presentation is the actual loan forgiveness application examples. And there will be 2. One example is for a corporation. It could also be an LLC. The second example is for a sole proprietorship. It can also be used for an independent contractor. Next slide. What I did want to just have you visualize, big and bold here, is the covered period for the payroll versus the alternative payroll covered period. And this is important regardless of how many days end up being eligible for use of the money. You really have to track the start date appropriately for your business to maximize your capacity to get a forgiveness and utilize the money. So the covered period, the normal covered period, is 8 weeks or 56 days from the date you receive your loan proceeds, including the date that you receive them, okay? The alternative payroll covered period allows borrowers who have a weekly or bi-weekly payroll schedule to elect to calculate their start date for the eligibility period as the first payroll date after they receive the money. So I'm going to give you examples of that on the application forms when we go through them. All right. So again, if you have payroll that is the 15th and the 30th or 31st or 1st of the month, then you have to use the traditional covered period. But if you have weekly or bi-weekly payroll, then you can take advantage of the alternative payroll covered period allowed start date. Next slide. So example 1, assumptions. are that the business name is ABC Inc. The owner-employee earns $6,000 during the covered period. They maintained 2 FTE employees after the order. They laid off 3 FTE employees after the order. They rehired 3 FTE employees after receiving the PPP loan. They paid $5,000 for employee health insurance during the covered period, and they paid $3,000 for state and local taxes during the covered period. Next slide. This is page 3 of the application. It is one of the documents that is required to be submitted to the lender. And this is the entire page of the document. We're going to go through it in 2 sections, and we're going to go to the next slide. At the top, it's pretty straightforward. You put in your business legal entity name. And then if you do have a trade name, you can go to your Department of Revenue for the state of Washington at www.dor.wa.gov and get your trade name appropriately filled in that section. For Idaho, I'm not sure, so forgive me on that one. The business address is the physical address of your operation. The business tax identification number or employer identification number or social security number is pretty straightforward. You would just list it, the 9 digits there. Put in your business phone, the primary contact for your business as it relates to this loan forgiveness application, and their email address. As you go down the document, you see an SBA PPP loan number. That is obtained from the SBA authorization doc, and your lender should have given you a copy of the SBA authorization. And then your lender PPP loan number you can obtain from your note payable. In this example, I'm using a PPP loan amount of $50,000 and the loan disbursement date of May 6th, 2020. Again, at the employees at the time of loan application was 2, and that is taken from page 9, step 1. Employees at the time of the forgiveness application is 5. That is taken from page 9, step 2. And it relates back to the assumptions that I provided that at the time the order was issued, you maintained 2 FTE, but you let 3 FTE go. They were laid off. At the time of forgiveness, you had rehired that 3 FTE and use the PPP loan proceeds to cover your payroll. And that's why there are 2 different numbers there. If you did receive an economic injury disaster loan advance amount, you do need to list the dollar amount there. And you can obtain your EIDL application number from the information when you applied for that EIDL loan. Okay, next slide. In the next section, I want you to see the difference in the covered period versus the alternative payroll covered period. And for the normal or typical covered period, if you have a payroll where you pay twice a month or monthly or longer between periods, you're required to use a covered period from the date you received the loan proceeds, counting that date and 56 days as the program stands right now. If you're using the alternative payroll covered period, your payroll needs to have been paid either weekly or bi-weekly. And then your payroll period, making the assumption that your first pay period starts on May 15th in this example. If you received your funds on May 6th and your next payroll date is May 15th, you can use that date, May 15th, as the start of your covered period. And it runs 56 days under the current program requirements from, in this example, May 15th to July 9th. Next slide. As you walk down the document, you are going to be putting information in these lines that are either obtained from different schedules or actual costs from documentation that you are keeping record of. So line 1 for payroll costs is a calculated number from Schedule A, line 10, and you will see that as we go through these documents. In this example, the payroll costs are $48,000. Line 2, I made the assumption that ABC Inc. did not have business loans, either for their real estate that is housing their business operation, nor business loans for personal property. So I put 0 in there. Line 3 is business rent or lease payments. And that can be facility rent, or it can be equipment leases, personal property leases during the covered period. Line 4 is business utility payments. And I'm going to read straight from the application for this, so I cover all of them. But business utility payments include service for the distribution of electricity, gas, water, telephone, or internet access, and this other descriptor of transportation. So on transportation, I would assume that it goes back to the actual delivery of utilities, not your automobile or vehicle expense that you would put on your tax return. All right, just for clarification there. So then on line 5, if you had a total salary or hourly wage reduction, which would be calculated from the Schedule A, line 3, you would enter that number in there. In this case, I assumed that there was no effective reduction in the staff, so I put 0. On line 6, you add lines 1, 2, 3, and 4, and then subtract the amount entered in line 5. In doing that, line 6 becomes $50,000. Line 7 has what's called an Fte Reduction Quotient. And again, that's a calculated number from Schedule A, line 13, which we'll be going over in a little bit. In this case, there was no reduction in the FTE, and the number would be 1. So when you are calculating your potential forgiveness amounts, what you do is take line 8 and multiply line 6 by line 7, and your resulting number goes on line 8. Line 9 is your actual PPP loan amount. In this case, both of the numbers are 50,000. Line 10, you take the payroll cost at 75% requirement. And how you calculate that is you take line 1 and you divide that by 0.75. Okay, so you take, in this example, $48,000 and you divide that by 0.75 and you end up with $64,000. Line 11 is your actual forgiveness amount, and it is the smallest of lines 8, 9, and 10. Because 8 and 9 in this example are the same, it would be $50,000. So in this example, the entire loan would be forgiven. Next. Next slide. Thank you. This is page 4. This is another page that has to go with your application. And it is your certification. So when you go through this, what I want you to do is read each one of these sections and make sure that it is true and correct. If it is, you're initialing it, okay? So I'm not going to go through each one of these, but basically it is validating the entire application process and the calculations that you have done. Your signature is required on the page along with your printed name, the date that you are submitting your forgiveness application, and your title. And you will see I put a July 10th, 2020 date on this document because I want to have you have a sense of urgency about getting this application done as early as possible, right after your covered period ends. And the reason for that is because you have used the money for approximately a 2-month period of time. As Steve noted, the lenders have 60 days to review this application from the time they receive a complete application. And then the SBA has up to a 90-day review period from the time the lender submits the application to the SBA. So when you add up the number of months that have transpired, you could potentially be at a minimum at month 7. And you have 6 months of non-payment on the loan. So you want to have this done as early as possible so that you are not in the 7th month having to make a payment on this loan before it's forgiven. Next slide. This is page 6. It is the PPP Schedule A. Some of the numbers on this form are pulled over to page 3. And we're going to walk through this page in a couple sections. Next page. So in this case, again, you are doing a worksheet, which is farther into the application document, and you are transferring information onto this page. Line 1 is the cash compensation from box 1 of Schedule A, Worksheet Table 1. In this case, that number ended up being $34,000, and you'll see that on the worksheet when we get to the form. Line 2, you are to enter the average FTE from box 2, also in Schedule A, Worksheet Table 1. And what I want you to remember here is that the average FTE prior to the order was 5. After the PPP loan was dispersed, it became 5 again. And if it is not the same, then you're going to have to go through a separate schedule and calculation to adjust your numbers down if you did not hire all of your employees back. Okay, and that will impact the amount of the loan that is forgiven. All right, so on PPP Schedule A Worksheet Table 2, this information is completed if you happen to have people who had compensation over $100,000. In this example, I did not have any, so the responses are 0 in both line 4 and line 5. What I made the assumption for line 6 is that the employer paid $5,000 in employee health insurance for the employees during the covered period. Again, you're going to document that with your payroll information and anything else that substantiates that dollar amount in real life. Line 7, I made the assumption that you had an employer who paid 0 toward employee retirement plans. And then on line 8, I made the assumption that the borrower, the employer, paid employer, state, and local taxes of $3,000 during the covered period. And remember, federal taxes are not included in this, okay? And I'm going to drop down here. Okay, next page. For compensation to owners, what's really important for you to remember when you're going through the worksheet and the first box, you as the owner of the company are not included as an employee in that box, but your compensation is allowed to be included in here because it was when you were doing your average monthly payroll calculation on the application. So what you do is on line 9 of this form, you put the dollar amount of the owner compensation for the covered period, okay? And then your total payroll costs are simply an addition of lines 1, 4, 6, 7, 8, and 9. And in this case, they add up to $48,000. When you go down to the full-time equivalency, FTE reduction calculation, lines 11 and 12 in this example have no number in them because I made the assumption that the entire FTE before the order and after the loan disbursement was made, you had the same number of employees. If you don't, then you have to go through and do other calculations in here, all right? As a result of the number being the same, the FTE reduction quotient is, in this case, 1 because the FTE safe harbor was met. And one thing I want to just inject here is that if you make a written offer to your employee and they decline the position, your business is not penalized for that employee not coming back. The most recent guidelines indicate that you need to provide to Employment Security a copy of that declination, the written offer and the declination by the employee to come back to work, okay? If you terminate an employee for cause, that is also excluded from the FTE safe harbor negative adjustment. Okay, next slide, please. Okay, so this is your forgiveness calculation form. It is page 7 of the application. And this is where you go through and at the bottom of the document, you do your calculations about the hours of employment by each one of your employees, make a determination about the FTE, the wages paid for the different periods. So we're going to go on to the next slide to see what that can look like. So what I want you to know is that in this case, there are 5 employees. You need to do one of these calculation forms for each employee, all right? So in this example, I did it for John Doe, who is the first employee on the list. And I made the assumption that the average annual salary or hourly wage during the covered period or alternative payroll covered period was $45,750. But I also made the assumption that the average annual salary or hourly wage between January 1, 2020 and March 31st, 2020 was also $45,750. In other words, John did not take a reduction in pay. So when you do the calculation in C, it ends up being 1. If 1C is 0.75 or more, you enter 0 in the column box above box 3 for that employee. Otherwise, you skip to step 2, and then you have to go through and do a calculation on the difference. And if the employee was paid less than 75% of their wage, you would go through and do the calculation for step 2 and then again for step 3. But in this example, John Doe received the same compensation, so steps 2 and 3 were not needed. Next slide. Okay, the Schedule A worksheet, table 1 on page 9 is what I have been referring to, where you would list the employees by name. And then table 2 is in here as well. And then your FTE reduction safe harbor calculations and methodology for doing that are also on this page. And you would only need 1 page for this, this series of calculations. Next slide. So this is what a completed table 1 and table 2 in this example would look like. We have John, Jane, Joe, Jill, and April Doe listed. You need to put in the last 4 digits of their tax identification number. You need to put in the cash compensation during your covered period that they received. You would then also put in the average FTE calculation for them. And if there was a salary or hourly wage reduction, you would calculate that in here as well. And again, in this case, I made the assumption that all of the employees were making the same amount of money before and after the order, and they all came back at the time the disbursement of the loans proceeds was made, and or your alternative payroll covered period. Okay, so what you do is you add up all of the cash compensation for the employees in box 1, all of the average FTEs in box 2, and then again, if you have entries in boxes 3 there, you'd add all of those up. In table 2, none of the employees received more than $100,000 in any pay period in 2019, so they are not applicable. But if you do have individuals that are employees for your company that have made more than that, you do need to list them. And you'd put the employee name, the last 4 digits of their tax identification number, the cash compensation, and again, do a calculation for the average FTE. Next slide. This section is the actual FTE reduction safe harbor. And again, it would look entirely different if you did not have all of the employees back. But in this case, what you're going to do with the assumptions in this example is you're going to list the total average FTE between February 15, 2020 and April 26, 2020. And the assumption that I made was that was 2, okay? Because that was the order period. And then in step 2, I need to enter the borrower's total FTE for their pay period inclusive of February 15th, 2020. So the pay period before the order. And in this example, they had 5 employees. And then step 3 says that if the entry for step 2 is greater than step 1, just proceed to step 4. And that's the example complies with that. So we skipped that section. Step 4 You enter the borrower's total FTE as of June 30, 2020. In this example, that was 5. And then step 5, if the entry for step 4 is greater than or equal to step 2, enter 1 on line 13 of PPP Schedule A. So you can see the data is flowing from the worksheets to your other documents. Okay. And if it doesn't comply with it, enter 1 on line 13, then you do have to do a little bit more work and do the math on that issue on step 5. Next page. Next slide, thank you. Okay, and then the last page of this document is actually the optional page. And it's really for informational purposes that the SBA uses to see what type of business owners are obtaining the loans. So in this case, you put in your principal name and their title or position. I selected Maria Doe. She signed page 4 of the application, certifying all of the items on that page were true and correct. She is a veteran, she's female, she is Black or African American, and she is a non-Hispanic or Latino individual. And again, this is an optional form, so you don't have to complete this, but it does help, again, the SBA identify who is obtaining the loans. Next page. So now we're moving on to example 2 for a sole proprietorship. Keep in mind that this would also be the case for an independent contractor. The assumptions on this one are that John Smith does business as Smith's Technical Support. As the owner, he takes a draw of $2,500 during the covered period. He maintained 0 FTE employees after the order. He laid off 1 FTE employee after the order. Pardon my phone ring. He rehired 1 FTE employee after receiving the PPP loan. He paid $0 for employee health insurance during the covered period, and he paid $350 for state and local taxes during the covered period. Next slide, please. So again, the top of page 3 is pretty straightforward. John Smith is the business legal name. His trade name is Smith's Technical Support. You put the physical address of the business tax identification number or EIN or social security number as applicable, the business phone, and then the primary contact in this case would highly likely be John Smith along with his email address. And as you further complete the form, remember that the SBA PPP loan number is on the SBA authorization, which your lender should have provided you a copy of. The lender PPP loan number is the one that is on your note payable document. In this example, I'm assuming that the loan amount was $12,500 and that the loan disbursement date was May 11th, 2020. Employees at the time of loan application was 0, and employees at the time of forgiveness application is 1. The idle advance amount is $1,000. And again, you obtain that from your application. Okay, next page. So for this example, the covered period could start 5/11/2020 and run through July 5th, 2020. Again, if the employee is paid twice a month or monthly or less frequently in other. The alternative payroll covered period, if John Smith pays his employee weekly or bi-weekly, could then be the first date of the next pay period, which I use an example of May 15th, and that would run for 56 days through July 9th, 2020. Next example. So when you're on page 3 and you're doing your loan forgiveness calculation, again, in this example, I put total payroll costs at $12,850. And I assumed that there were no business mortgage interest payments, and business mortgage interest payments include a commercial real estate loan that houses the subject business, or it can include personal property loan, a personal property interest loan, okay, interest expense on that loan. So if you have a loan for equipment, that's business personal property. The interest expense on that is eligible for inclusion here. On line 3, your business rent or lease payments, again, are eligible and may be included in there. And the lease payments are typically going to either be for equipment, you could say it's the space that houses the business as well. That, you know, business rent or lease payments covers facility or personal property. And line 4, again, has that expanded descriptor of the items that I described before. And again, just keep in mind, they're all tied to utilities of one form or another, all right? Line 5 is, again, from PPP Schedule A, line 3. In this example, I put 0. Line 6, I'm adding the amounts on line 1, 2, 3, and 4 and subtracting line 5. That works to $12,850. Line 7 is also from PPP Schedule A, line 13. And again, because I made the assumption that the employee was full-time prior to the order and full-time again after the receipt of the PPP loan, that number ends up being 1. And on line 8, you take the modified total, you're simply multiplying line 6 by line 7. That in this example is $12,850. I made the assumption that the PPP loan amount was $12,500. And again, I'm taking line 1 on this form and dividing it by 0.75. That works to be $17,333. So again, for line 11, you are taking the lesser, the smallest of line 8, 9, or 10. In this case, it is $12,500, which is the loan amount, and that is the amount that would be forgiven. And notice at the top of here, I did not mark that the PPP loan is in excess of $2 million. Not accidentally and not on purpose, because the loan amount that we made the assumption for was well below $2 million. And you only need to mark that box when it is 2 million or more. Okay, I'm sorry, in excess of $2 million. All right, the only time you need to mark that box. Next slide. Okay, again, page 4 is the certifications. And in this case, you would put your initials by each one of those items to validate that they are true and correct. You would sign, in this case, John Smith would sign, put his name there, put the date and his title. And it could be owner, it could be independent contractor if that's applicable in the case, or sole proprietor, whatever the title is. And you'll note again here that I put a July 10th date down on this because I would recommend having all of your paperwork together to document your loan as much as possible throughout the process. Keep it in a file. And then as soon as your covered period is over, get this application completed and into your lender to start the forgiveness process, so that you're well within your no payment period. Next slide. Okay, so for Schedule A, when we're going through this, again, you're going to be pulling the data from Schedule A Worksheet Table 1. So in this example, line 1 is $10,000. That was the amount of compensation paid over the covered period to the employee. The average FTE, again, is 1 because she was rehired as a full-time employee as she had left as a full-time employee. And line 3 in this case is 0 because there was no reduction in her salary or hourly wage. The cash compensation for lines 4 and 5 are not applicable because the employee did not make more than $100,000 annually. And on line 6, I made the assumption that John Smith did not pay his employee health insurance. There was no contribution to employee retirement plans, and the amount paid by the employer for state and local taxes was $350. And what you don't see right here, go to the next slide, please. Thank you. Okay, so if you're a sole proprietor and you have no employees, or you're an independent contractor, on line 9, here is where you put your compensation as an self-employed or independent contractor for the covered period. Okay, so when you do your total payroll costs, you're included in there, and you add up lines 1, 4, 6, 7, 8, and 9, and that is your total payroll cost. If you have entries for 11 or 12 as calculated, you would put those in on line 11 and 12. In this case, they were not applicable, so they were blank or 0. And the line 13 is 1 because there was no reduction in the FTE. So the safe harbor was met. Next slide. So here is the infamous worksheet tables 1 and 2. And what you see here is that you're going to write down each employee name. You again are going to exclude yourself as a sole proprietor or as an independent contractor. You're not going to list yourself here. So in this case, John Smith had 1 employee, Georgia Brown. He put in the last 4 digits of her tax identification number. Her cash compensation during the covered period was $10,000. Her average FTE is 1 because she was a full-time employee, and there was no salary or hourly wage reduction. So when you total all the lines here, box 1 is $10,000, box 2 is 1, and box 3 is 0. Table 2 is not applicable because there was no compensation over $100,000 in any pay period in 2019. Next slide. When you're going through this, again, you're going to put down your FTE, your average FTE for your employees. Step 1, again, for February 15th through April 26th, the order period, John Smith had no employees because he laid Georgia Brown off, okay? In step 2, you enter the borrower's total FTE for the pay period inclusive of February 15th. And that would be 1 FTE in this case because Georgia was an employee full-time. And then step 3 is not applicable. Step 4, you enter in the borrower's total FTE as of June 30th, 2020. In this case, it was 1, it was Georgia. All right. And then step 5, you just do your math in that particular category. That is it for me. So thank you. And we'll pass it back.
All right. Joel, we have no shortage of questions here. And so I'm not sure. I know a lot of them have been answered in the chat box. And so I guess I can start throwing some out there if that works for you guys.
Yeah, go ahead, Lance. We have, I think, addressed a lot of them. We're monitoring the chat box through that process, but certainly if people have additional questions, they can call me here in Spokane, or you have, you see Mark and Steve and Janie there. And I think the prior slide was a phone number. My number is 509-353-2810. And just leave me a complete message and we'll do our best to answer your questions.
And what we'll do is in our recap email, we will include contact information for facilitating getting you in touch with the speaking panel here. So
yeah, do that. And if you want to send a list from that chat box to me, Lance, we'll do our best to get answers back to you that you can distribute to everybody.
Perfect, and we intend to do that. So again, additional questions, if they come up after the call, please do email us at info@SpokaneValleyChamber.org. We will jump through a few of these while we have time. I know we have a pretty firm stop here at 4:30, and so we'll have to rely on follow-up post-call. We do intend to put a full recap of the Q&A that is appropriate on the webpage where we'll post the video link. That should be up in this case due to the question volume. We anticipate late Monday or early Tuesday having that link up and then recirculated for everyone who was on the call here, as well as
we call this the lightning round, Lance.
Well, we will see how many we can fit in here. So circling back, let's see here. And I did as good of a job as we could to track these as they went. So if a business applied on the first day of an application and the lender told them that they could only include any numbers listed financially on their 990 and the loan was funded, can a business go back and do another application or revise their current application for the rest based off of mortgage, medical, premiums paid, utilities? And sorry, they clarified not on the 990, but on their quarterly tax returns. I guess, can you resubmit an updated application to change the loan value?
Has the application, it's for a PPP, I imagine, has the application been processed by the lender? That would be the question, because if it hasn't been processed by the lender, they should be able to contact their lender and modify that application. But if it's been sent in, then they can work with the lender on any corrections potentially.
Okay, and it looks like we got some clarification there that it depends on their 1502 form.
This is Janie. If I just did this for another call in today, if the loan has been processed, there's only one exception to go in and do an increase request, and that's if it was a partnership entity, because there was a little bit of a difficulty with the rules. But other than that, if the loan has been done and authorized and funded, there is no room for change to the loan amount.
Okay. And then another one.
Definitely, they should definitely call their lender, right, Janie? See what the status is.
Yes.
And then another one, Janie, if you reduce your FTE so your forgiveness amount is reduced, do you still pay the loan back on the regular schedule, or do you have to pay the rest of the amount back right away?
Any unforgiven amount on the loan is paid back over the 18-month period.
Okay. And then we had a question, they pay their employees for travel. Would that amount be included as forgivable?
That wouldn't fall under payroll. That's a reimbursable expense. And so it wouldn't count as payroll or a payroll expense.
Okay.
That's a, you know, an ongoing expense of the business.
Let's see here, seeing ones that we didn't have answers provided for. As they work through the guidance related to what is considered state taxes for loan forgiveness, workers' comp, and PFML, excuse me.
My understanding is that you can include all of those things as long as they show up on the actual payroll records. Tom asked about general liability insurance. It might be based on payroll, but that would not be part of the appropriate use of PPP funds.
Question came in, can PPP funds be used for inventory and material costs?
No, that's not an allowed use on the PPP. That isn't allowed use on the idle.
Are there any variables that need to be noted for applications coming from 501c3 nonprofit organizations when it comes to the forgiveness?
I believe the same rules apply to the nonprofit as do to the for-profit businesses.
Correct.
And we went over the legislation update, and so I would assume we could factor in that we can revisit this conversation pending.
Not tomorrow morning.
Not tomorrow morning, but maybe we'll circle back with you.
Wait till Monday. Yeah.
Yeah.
For sure.
I know that you were gracious enough to come on this early after the first round of guidance, so we'll give you a couple weeks to soak that up and come back on it. Let's see, if a PPP loan recipient gives a raise during the 8-week period, can they include that in the forgivable ask?
I would say as long as it's in the normal course of business, what you want to watch out for is bonuses and kind of unusual compensation. But if somebody's been working for you for 6 months and based on their employment agreement or whatever it is that they're due for a raise at that point, that's just part of the normal course of business and it should be included.
Okay, and then on through that. And then currently the deadline isn't driven by the lender, but it's driven by the program, correct? For submitting for reimbursement?
Or for forgiveness?
Forgiveness, yeah, sorry.
Correct.
And then if an employer paid incentive bonuses to return to work, can those be included in the compensation of the employee?
Yes,
Boy,
bonuses are allowed.
Yeah.
You want
And
to
Janie, yeah, we get that question quite a bit because a lot of employees were, you know, the classic making more on unemployment than they make working for the company. And but go ahead.
Yeah, I was just going to say, you want to make sure that it's not a, a large bonus as a percentage of the PPP loan. I think that would be suspect, right?
Yeah.
So as long as it's reasonable relative to the purpose of the bonus.
I agree, Janie. I think that one thing you've got to be clear, though, is you still have to meet the FTE requirement relative to that.
Yeah.
And then they had another question on the Schedule A worksheet. Do they make copies of the blank worksheet and fill out one for each employee individually?
Yes, they do.
Come on, you guys. I think Janie's just taking us to town here. She's winning the lightning round.
Let's see here. Bob Allen from Humanics had a question. In most states, worker comp premiums are based on payroll, but in Washington, it's based on hours worked. Can Washington workers' comp premiums be considered as part of payroll costs for PPP forgiveness purposes, even though premiums are not based on gross compensation?
The state and local taxes are includable.
Yeah.
So whatever they are, is allowed. Does that answer the question?
I think so, yeah.
Yeah.
Yeah. Let's see here. We had that question regarding rental of a building was based on a verbal agreement. Steve, I think you provided an answer there that you'd want to be able to document that in some way if you're going to include that for forgiveness.
Agreed.
Yeah,
I think
yeah.
you're going to have to produce records to support whatever it is, and there should be some records about that.
Yeah, and it can't be something that they've just been, frankly, paying under the table to use the space. It's got to be a true business expense, and they would have had checks or some recording of transfer of funds to that owner on an ongoing basis that it could prove that it's a verbal agreement, but it's a regular rental expense.
Yeah, the other thing is it should show up on the 2019 return too. And
Yeah, as an expense.
yeah, and if you're a sole proprietorship and you're working out of your home, or even if you're a business and you're working out of your home, it would be a good idea to list rent expense or an allocation for the household utilization on the Schedule C, so that could be a way of validating your rent to yourself or from the business to you personally.
We had a couple of questions come in surrounding applicants who have both PPP and EIDL loans. And so one of them asked if they could use PPP for payroll only and then sit on the EIDL and use that for other expenses since it's got a longer term on it. Are there challenges behind utilizing both?
You can use both so long as you don't use the EIDL loan for payroll for the covered period.
Okay.
Because the EIDL loan has a 6-month disbursement period. So it is a longer period than the PPP loan as it stands right now. Now that may change. But, the thing is, you don't want to duplicate that payroll issue. So there are several more allowances for the EIDL loan as far as use as compared to the PPP loan. So I think you could easily demonstrate different uses of the money and not be in, get in trouble.
We had a question come in at the end here. When will the proposed extensions to the PPP timeline and proposed change to the percentages be decided on? And I guess we're all at the mercy of Congress and whatnot on that. And then the signing signing of that bill that we would expect to happen potentially as early as tomorrow, should it get through the Senate and the president signs it into law, would be then it has to go to Treasury for being added into the current documents, correct?
Yeah, I mean, Lance, we don't know what the timeframe is going to be. You know, they've got to spend some time revising the interim final rules, the FAQs, all the information that's coming from Treasury. So I suspect that's going to take a while. Joel or Mark, do you have any idea on that?
The timing is indeterminate, but certainly be sure everybody wants to be checking that Treasury website, because they've been really good about posting updates as soon as they're available. And we've been using that as a great source of information as well.
And then another one, when will SBA start accepting forgiveness applications?
What kind of applications?
The forgiveness applications. Yeah. The forgiveness application needs to be submitted to the lender. And then the lender has 60 days from the time they receive a complete forgiveness application to review it and then forward it to the SBA. And the SBA has 90 days to make a decision on the forgiveness.
And then is there a separate application to apply for the EIDL advance forgiveness?
Yeah, I just sent an answer to that. I guess I didn't copy everybody, but no, there's no form to fill out for EIDL advance forgiveness.
Okay, so no form necessary, or there currently just doesn't have a form in existence?
There's no form. A form isn't in existence, and there is not one necessary that we know of.
Okay, so we have to watch for additional guidance there should it be required.
Don't watch for it. You don't want to see it.
Lance, Joel's correct, but there is an element here that we didn't touch on before. If you got a EIDL advance of $5,000 and then you wind up getting an EIDL loan offer of $40,000, the EIDL advance is deducted from that and you only get an EIDL loan of $35,000.
Okay. We're going to work through these questions, format them, and make them a little prettier, and then send them on to our panelists here for getting some answers to those who, if we missed your question, we do have the chat recorded. And again, you can send a question into info@SpokaneValleyChamber.org. We'll go ahead and get those forwarded to the appropriate speaker to get you an answer. And then again, look for a recap email coming out early next week for this call. Give us a couple days due to the volume of questions and the size of the video. So we'll get those posted, have the video up along with the full Q&A recap, and then get you individual question answers out to your email addresses through which you registered. So thank you to our full slate of speakers, Mark, Steve, Janie, and Joel.
Hey, Lance, I just want to compliment the three chambers here in Spokane County for the job that they've done working together and really helping to help the small businesses. It's been a tremendous effort. You guys have just done a fantastic job of coordinating and working together to help make this as good as possible.
Thanks for that, Joel. I know it's been a lot of communication to make sure that we don't duplicate programs and we bring the right information forward. So we're going to continue to try and do that. So hopefully have you 3 or 4 back here in a few weeks once we have additional guidance with the updated portions of the PPP programming that looks to be coming our way. But until then, at least we have these details out and we can start that process of, again, getting your forgiveness documents together and submitted to your financial institution to get the ball rolling. That's the biggest goal, is to get as much of this forgiven as possible. And so, again, any additional questions, feel free to reach out to us, and we'll facilitate getting you connected with the right resource. So at this time, on behalf of the Valley Chamber and GSI and West Plains Chamber, thank you for joining us today, and we look forward to seeing you all next week. Thank you. We are adjourned.